Hello friends, this is Raj Sastry from Raj Option Trading. Today is June 3rd, 2022. Hope you're all doing well. In today's segment, we'll take a look at Align Technologies, ticker symbol ALGN. This company is behind the smile. They got very good technology to make your teeth look good. So with that, let's jump in and get started. We'll start with the background of this company and see what Align Technology does. And then let's look at the competitive landscape. This is where we take a look at top medical device stocks and see which ones we can buy at these levels. And then let's look at the fundamentals of Align Technology by looking at the numbers, both annual as well as quarterly. And then let's look at technical analysis and see how are the charts. Is it a good time to buy? How is the on the balance volume? And look at some technical indicators. And finally, let's conclude with the rating. Is it buy, sell, or hold? So with that, let's jump in and get started. All right. So as you look through the leadership here, we got Mr. Joseph Hogan. He seems to be very good leading the company. He's got a nice 91% approval rating from his employees. That's a very good rating. I think he's leading the company very well. As you see here, he has been CEO since a long time ago, since 2015. That's a long time ago. So during his CEO role, he has increased the revenue nicely. That's also great. And before becoming the CEO, he was CEO at ABB, which is a $40 billion company. And he was also with the GE for 25 years. And looks like he was a CEO of GE Healthcare. So he's got relevant industry exposure. So I think he's the right guy for the job. He's been doing pretty good job and also nice approval rating from his employees. So with that, let's go into a little more detail. Look, from a strategic driver perspective, this company is going through the international expansion. They're in multiple places. They're in China, Japan, and multiple even Europe and many places. So they're still expanding internationally. That's a good sign. And there is a nice patient demand and conversion. They're focusing on basically conversion to patient demand and conversion to get more and more patients and make sure they like Align Technologies. And finally, they are focusing on the relentless execution. They are working with orthodontists and also working with the general practitioner dentists. So that way, they can put their product into these practitioner hands and make sure execution happens flawlessly. All right, now let's jump in here and look at the financials. From a financial perspective, look from a net revenue perspective, it's quarter before it was 815. That's Q4. In Q1, it's slightly down, as you can see here. Whenever there's a COVID worries, China lockdown, that's when folks don't want to go to dentist's office, and this company takes a hit at the time. As situation improves, as supply chain issues also improve, and China opens up, and the COVID worries slightly subside, this company can do very well. And as you see here, even their clear Align system, I think that's what we looked at. And they got also systems and services that also came down slightly, as you can see here, which is typically happens with this product because folks are afraid to go to dentist's office when there is a virus outbreak. And look from a shipment perspective, their clear Align shipment is also slightly down with the same impact here because folks are worried about going to dentist's office. And from a gross margin perspective, there is a slight increase in gross margin from previous quarter. That's a good sign. Operating margin is slightly down, about 1 point down, which is not great, but I think it's okay. All right, now let's jump in here and look at the company. Look, Align Technologies stock price is about $273, And this company is a medical device company. They design, manufacture, and market Invisalign clear aligners. It's really hit. If you talk to anybody, everybody loves their product. And they operate in two segments. There's a clear aligner and there is a scanner and services. And company has been doing very well. Back in 2020, look, even 2021, they've been doing great till September 2021. But after that, look, it's like a free fall, as you see here. And as you see here, now they're bottoming out. There is a nice consolidation pattern here. And if you see here, back during the earlier days, during the COVID days, stock came tumbling down. Look, nice drop here, slight consolidation, and then stock went higher. And if you see even before here, there is a nice consolidation pattern, then stock went higher. So I could see this, something similar here, nice drop here. Now we got a consolidation pattern. Can it go slightly lower? It can, but I think at this time, as situation improve in China, and as situation improve with the supply chain, and also folks are a little more open to go to dentist office, this stock can go higher and bounce back nicely. That's one of the reasons I'm slowly buying this company, and that way, it can go down slightly, but I think from here the upside is more. From an analyst perspective, look, analysts are saying strong buy here, with 8 analysts saying buy and nobody saying hold and sell. That's a good recommendation. And look, all these high growth stocks came down here. In technology, it came down along with these all high growth stocks here. Look, Malibu Boats, Align Technology have been highlighted here, and stock came down pretty much big time here. And they also have new product here. They got Align Technology with the clear outcome simulator. Looks like company is trying to do the right thing, but there is some issue around folks going into dentist office right now, and also all the growth stocks are really got slaughtered of late. That's why this stock came down big time, as you can see here. Even today it came down slightly, around 11%. It can go down slightly here, but around say 270 or so could be a nice level to start buying this company. All right, now let's jump in and look at the price target. From a price target perspective, look, the current price is around 273 here, and higher target is $635. That's a nice premium from the current levels. And median is around 442, and the lower target is 310. It can come down, even it's above the lower target. But stock, I think it's a good one to slowly start buying here. This stock can bounce back pretty hard. And from a technical perspective, it's a sell right now. The chart does not look good, but fundamentally, look, analysts are saying buy. It's a good divergence here. All right, so with that, I think it's a good one to slowly start buying and accumulating. Stock is down big time, as you see here, down 62% from 52-week high. All because of this Wall Street rotation out of all these high growth names, and also worries about folks going into doctor's office and dentist office especially. All right, now let's jump in and look at the health score. From a health score perspective, look, valuation perspective, it's richly valued at this time, around 75% compared to its peers. It's a growing company. Look at the growth score, nice 99 growth score. That tells the company is growing pretty good, very much better than its competitors. Quality score is also pretty good if you compare to competitors. Their margins are much better. And sentiment perspective is middle of the road here. Right now sentiment is not great, but that happens when the stocks are really brutally slaughtered. And from a Piotrowski F-score perspective, this Piotrowski F-score tells you how good are the books. Right now, books are good here. It's a 6, pretty consistent, around 6 here. I think it's pretty good here, nice consistency, and the books are good here. Altman Z-score, nice and high here. I like it when it's more than 1.9. This is 7.9. This is superb Altman Z-score. That tells you financially this company is sound. And look at the rating here, all the rating here, all the way from overall rating, growth rating, valuation, everything is high. I typically love when the valuation is slightly lower, but this company is richly valued. That's one of the reasons it's coming down off late, because it's a momentum stock. And if you look at the momentum right now, momentum is down. This stock has come down right now. That's why momentum is low at this time. That's when it's good to slowly start buying. And look from a price target perspective, the low target 260, high target 790, and the mid target is around 479. To reach the mid target, stock has to go up by 75%, as you can see here. That's a good uptrend from the current level here. There's a nice bounce back opportunity here. And from a PE ratio perspective, slightly expensive, as you can see here. And forward PE is a little bit low. That's good. And PEG ratio perspective, it's not bad. I think it's a growth company. It's below 1, which is good. And earnings per share for current year is positive. And 5-year EPS growth is also positive and nice. Sales growth for next year is great. So that's why they're doing very well. There is a good expectation from analysts for the next year and next 5 years. And look from an EPS surprise perspective, last quarter when they announced the earnings, they gave a negative EPS. That's not a great sign. That's why stock got a big hit here. They had a miss on the revenue side as well as EPS side. That's why stock came down here. From an analyst rating perspective, nice and high strong buy here. It's a good strong buy. I think at this time, by looking at their valuation and looking at their comparison with the peers, this company is doing pretty well here. I think right now it's okay to slowly start buying this great company here. All right, now let's jump in here and look at competitive landscape. So what we're doing here is to look at the medical device stocks, top-notch medical device stocks, and see what's good to buy right now. And also look, this company is focusing on teenagers right now, and over 12.8 million total Invisalign patients to date with 3.4 million teens. So they're really focusing on the teens here to make sure teens look good. All right, now let's look at the competitive landscape. Look, from a competitive landscape perspective, we are looking at medical device stocks. The top dog here with the nice market cap is Abbott Labs, which is a great stock. I love this stock here. And also keep watching both RSI as well as overall score. I love to buy the stocks when they're down, and especially the good fundamentally great stocks with nice positive net margin. And also I love the stocks when there is a nice overall high score here. Those are my favorites. So with that, at this time, I may not pick up Abbott Lab, even though it's a great company. I would rather wait slightly because RSI is slightly high for me. It's not too high, but slightly high for me. And I would pick up stocks like Medtronic at this level. Medtronic is a great stock, as many of you know, but got slaughtered of late. As you can see here, it got slaughtered all the way to 1 year. And look, it's got a nice net margin here. Company has been down for a while here, but it also bounces back. So it's a good one to slowly start buying up here. Given RSI 33 tells you it's completely sold off here. And then you got a few more with lower RSI. Keep watching these names here. Stryker all the way to EW here. And even the next one, BSX, all are lower RSI here, below 50. You could look at these stocks here and buy them. Look at the net margin here. I love the one with nice and high net margin. Look, we got ISRG, which is good. Intuitive Surgical, which is one of my favorite. And you could also look at Edward Life Sciences, which is again one of my favorite here. You could focus on those names. And then you got few more here. Look, even we got few more names, as you can see here. We got Baxter. Baxter is also a good one here. positive net margin. Overall score is 71. Stock is down with the lower RSI here, and okay net margin 8%. And we got few more as you see here. Look, we got West Pharma, which is also good, and we got STE Steris, also great. Overall score perspective, West is doing great here with 88 overall score, and look, RSI is 46. You can buy this great company here. And then you got Align Technologies right here. It's also great stock here. Overall score is great, nice and high, 88. And net margin, nice 18% net margin. Company is making money. But look, RSI is 41 and stock is getting slaughtered in the near term. That's when you can buy some of this stock here and go from there. And we got few more here. Keep watching the RSI here. Most of these stocks are low RSI at this time here, so you could buy these stocks also here and focus on the nice and high overall score here, like the one right here, HOLX here, 96 overall score, and look at the RSI, pretty low here. You could buy this great stock here and you will do well. And look, PDD here, PODD is a good one here, still a little bit higher price to sales ratio or valuation, and PE ratio is also high, but at these levels it's a good stock. I buy this once in a while and do some option strategies on this one also. And then you got few more here. Keep watch on the lower RSI ones. Even TFX, it's a low RSI. You could look at this one also here. Nice overall score here. All right, now let's look at the industry grade here from Morningstar and also other grades. So same stocks here. Look, we got Altman Z score, Piotrowski F score, financial growth and profitability grade from Morningstar. So with that, you get a good idea what's doing well here. I like the ones with nice and high grades here from Morningstar, and also nice Piotrowski F score. That tells you if Abbott Lab comes down anytime, call me a buyer. Mainly because look at that nice and high Piotrowski score F9. That's the highest it gets. That tells you books are consistently great. So this company was down in the dumps just a month or so ago, but now it's came back nicely. If this stock gets slaughtered, I would be buying this company. It's a great one to buy here. And as you scan through here, we got a few more here. Medtronic has got a little bit lower growth, as you can see here. C in growth, C in profitability. As you scan through here, we got West Pharma here. Look, it's got a nice and good score here from Morningstar. From a financial perspective, growth and profitability, you could pick up such stock here. You will do very well. And we got RMD or ResMed. It's slightly high RSI right now, but nice overall grade here. Financial, it gets a A grade, as you can see here. And we got a few more here. Even Intuitive Surgical, great grade here. You could buy that one also. Even BDX is also great. You could buy that one too here. And Edward Life Science, also great one. Nice overall score. Financial grade is great here. You could buy those ones also. Alright, so we got a few more here. Keep watching Align Technology. Again, another solid performer here. Look at the Morningstar grades here. B, B, and A. That's a great grade here. And nice and high Piotrowski F score, as you see here, 6 right now. And we got a few more here. And keep watch on these scores, and you do very well. And I love, some of these grades are really great here. Some stocks like PODD has got profitability grade a little bit lower here. Sometimes these growth stocks, they grow nicely, but they don't worry too much about profitability. That's why, look, your net margin is lower for this company. I would focus on probably higher net margin companies, so that way you don't get burnt out. All right, now let's jump in here and look at Align Technologies. Look, Align Technologies stock price is about 273, and look there, they have a revenue per employee 175,000, not too high, but it's okay. And look, analysts recommend a strong buy for this company. And look, RSI is lower. And for the folks who want to sell some put options way below, it's a nice and high IV percentile that tells you you can sell some put option. If you are a little bit cautious about this company, you could also buy some put options. That's also, I would say put spread is better given high IV percentile. And look, earnings is over. You don't need to worry about earning. You could slowly start buying some stock here, or you could even sell some put option below the current stock price and make some money that way too. Stock is getting slaughtered, as you see here, 1 day, 5 day, 1 month, all the way to 1 year. It's down. But in a 5-year, 10-year period, it's done great, as you can see here. Long term, it's a good stock, but short term, because of all this inflation worries and folks not visiting dentist office, the stock is coming down slightly. And also there is a foreign exchange which is unfavorable when they get the money to US. Because of the high strong dollar, it does not do very well as you bring the money into US from outside. And look, from a sales growth perspective, next year sales growth is double digit, nice and good. And next year EPS growth also is great here. I think this is a good company. And as you scan through here, nice net margin. And look, they got low debt. Look at the debt here, just $130 million, not too much at all. Nice and high total cash, $1 billion cash here. And as you scan through here, keep watching here. And look, from a moving average perspective, right now it's not great, but put call ratio is tells you there is a high amount of call buying going on here. Put call ratio is very low. And Align Technology, they don't trade too much in the option market. It's thinly traded in the options market. And as you scan through here, nice and high average true range that tells you stock moves about $18 up and down on a 14-day time frame. That's a good ATR for the folks who want to buy and sell stocks and or day trade or swing trade. That's a nice ATR that tells you the stock can go up and down nicely. You could take advantage and do swing trading. And technical rating is look, it's a sell rating right now. And if you look at 1 month here, 1 month low is 250 and 1 month high is 309. Stock fluctuates, and right now current price is 273. That's why it can go slightly down, but around 270 or 265 is a good one to start buying. Even up here, it's a good to slowly start buying. Nice and high score here from a Morningstar grade perspective. That's a great grade. You could buy this stock. It's a good one here. Overall rating is 88. That's a good one here. I think overall solid stock. All right, now let's look at the numbers. As you look through the numbers here, look from a revenue perspective, stock has done well back in 2020. And now the EPS came down, as you can see here. But overall trend perspective, trend is positive. That's a good sign. But sales perspective, it's doing great. Looks nice sales here. The top line is growing nicely. And shares outstanding is slightly increasing, but not a big deal here. They're not diluting much. Operating margin, it went higher in 2021. That's good here. And net margin also kind of trending higher. That's good. And debt to equity ratio looks like they have some debt, but not much at all. It's just about $150 million. No big deal at all. They have low debt. So with that, looks like they're doing pretty well here. I think if they can increase their operating margin, I think they did here. But I think they should consistently do it. Overall, I like this company. Nice top line growth. Nice EPS growth, and shares outstanding is pretty constant, which is good, and net margin is improving. That's also great. Very low debt. That way it's a good one. All right, now let's look at earnings history. From an earnings history perspective, look, stock missed when they announced back in back in April 27. They missed on the earnings per share. Also, they missed on the revenue. That's why stock came down here, and stock tumbled after the earnings. But overall, look at the nice growth here. Revenue growth is pretty good here. Company has been consistently growing the revenue. Back in 2018, Q1, it was $436 million from a revenue perspective. Now it's almost $1 billion revenue. This company is growing nicely, as you can see here. All right, now let's jump in here and look at quarterly numbers. Look, current stock price is around 273. Back in March 31st, it was 436. Nice haircut from March number to current number. And from a market cap perspective, back in March it was $34 billion. Right now it's $21 billion. So it's a nice haircut from a market cap perspective. And price, as you can see here, off late it's coming down, 665, 657, and from that to 436, and now it's 273. Stock got slaughtered, as you can see here. From a sales perspective, I think it's pretty steady Eddie here. Came down slightly, as you see here, from 1 billion to 973. And dilution is not much. I would not be worried about that. Sales changes, look, they're taking some hit here. Look, 331 2022. It was 8.8% sales growth. But if you look at the same 331 2021, look at that growth here. They could not keep up with the pace here. They did very well back in 2021, but now it's slightly less. That's why analysts are not very happy. Wall Street is not very happy. Look, from an earnings surprise perspective, it's a negative earnings surprise. When they announced back on April 27th, that's why it went down. Nice cash. I love the cash on the balance sheet here. That's a great one here. Debt is pretty low. I'm not worried. It's a very nice and low debt. And free cash flow, it turned negative free cash flow here. This can turn around very low number here, but negative free cash flow right now. From a gross margin perspective, it's a slight improvement. That's a good one here. But operating margin is slightly 1 point down here. Not good. Net margin also slightly down. Wall Street does not like this also. And they're putting money in R&D. That's always good. And I think overall it's a good one here, but stock is completely slaughtered. That's why I recommend slowly buying. Don't buy too much. Buy slowly. This stock can bounce pretty hard. All right, now let's look at the seasonality of this company. I love to look at chart like this to understand the heartbeat of the company. Every company has got a rhythm. As you look through this chart here, looks like around say April stock comes down nicely. Look, around March stock came down here, big time down. April, May, June, even July stock is doing pretty well. So right now, this year it's a different pattern, as many of you know here. This stock took a hit, but you could slowly buy here. I can see this stock rebounding as you go forward, because it already dropped, April, May, it dropped here. So cycle is slightly disrupted here. It can now start bouncing back here. That's one of the reasons, I would buy this stock here. Also look, typically in September, October, November, they will do well. And also Jan, Feb, they will do pretty okay here. Mostly they're up compared to S&P 500, with the exception of month of March, month of August, and month of December. Otherwise, they're outperforming S&P 500 handily. All right, now let's jump in here and look at the technicals. From a technical perspective, it's a 5-year weekly chart. Look, stock got slaughtered here back in October. This was earlier interest rate hikes. Stock kind of came nice consolidation here. Then it went higher. Nice consolidation, went higher. And right now we are forming a nice consolidation here. Next leg could be higher by looking at the previous consolidation patterns. All right, now let's look at a 18-month chart. And as you look through this chart here, stock is taking some beating in the near term, as you see here. Now nice consolidation on the balance volume is stabilizing. That's a good one here. And RSI, relative strength index, is picking up, as you can see here. That tells you momentum is coming back to this stock slowly. And as you see here, the smart money is not yet convinced. They're waiting the sideline here. But as stock starts going higher, slowly smart money will go into this stock here. But right now, smart money is not going into the stock yet. And from a DMI perspective, this is one of my favorite indicator. Red line wants to come down and blue line wants to stabilize and go higher. So this stock can become bullish as blue line crosses over red line. Blue line goes higher, red lines comes down. That can be a good bullish crossover. It's trying to make the crossover right now by trending. The blue line is trending flat to high. That's a good sign here. All right, now let's look at the option chain. From an option chain perspective, look, stock price is 273, 52-week high is 737. Look at the difference. This stock got slaughtered big time. No respect for this stock in the Wall Street, mainly because it's a high multiple or a high valuation stock. So in the options market, this stock is not trading much. It's very thinly traded. So I don't recommend buying option. If you want to buy maybe long term, maybe say at least 1 year out or something, or even 90 or 100-day out. Don't buy short term option here. For this one, because it's thinly traded, you will end up paying more. Look at that bid-ask spread here, pretty wide. That's why this stock is not a great one to do options. But if you want to buy options, make sure you tighten and give a lower limit price, somewhere between the bid and ask, or maybe a midpoint. All right, so you can look at the call side again, put side here. Put side also volume is not great here. But anyways, let's look at the put call ratio. From a put call ratio perspective here, look, total call contract is 3,000. Total put contract is 1,000. That tells you in the options market, even though volume is low, folks are betting the stock will go higher. That's why put call ratio is very, very, very low here. That tells you more call option buyers than put option buyers. That's a good sign. All right, now let's look at the conclusion. From a conclusion perspective, look, CEO said it's a tougher quarter, tougher than expected, mainly because there are multiple issues going on. And look, they got three key factors. One is COVID-19 waves in every region, especially China. The moment there's a COVID-19 wave, folks will be very hesitant to go to doctor's office. When they don't go to doctor's office, doctors will not be able to put on this Invisalign technology. That's why stock is down. That's number one. Number two is around the economic environment right now, and consumer confidence is not great because of the inflationary pressure. And number three is around supply chain disruptions and military conflict in Ukraine and followed across Europe. So these are some short-term issues. As this situation improve, I can see this stock going higher. And look, in addition to the above issues, they also have this unfavorable exchange rate, because US dollar is very strong right now. As they bring the foreign money or outside of US money into US, that's not very favorable because of strong US dollar. You can see this consistently in many earnings report right now, because everybody is feeling the pinch because of strong US dollar. All right, now if you look through their growth here, I think even despite of all these headwinds, company did very well. They were up 8.8% year over year. But if you compare to quarter over quarter, it's slightly lower. And as you see here, they did very well from a revenue growth compared to year over year, 62%. That's also great one here. And operating income also was good. It's nice and high if you compare to year over year, but quarter over quarter slightly down from a revenue perspective, as you saw earlier. And look, they're also working with the new Invisalign technology for teen subscription. That's a good one. Teen subscription program is good. They're thinking about innovative way to sell more and earn more revenue, which is always great. And as you see here in the United States and Canada, they're testing this right now, and they're also working with orthodontics, which is great here. And as you see here, stock is completely oversold due to short-term supply chain issues, unfavorable foreign exchange rates, China lockdown, and so on and so forth. Folks are really don't want to go to dentist office of late. That's why stock is down, and I recommend buying this stock. It's one of my favorite stock here. I typically buy this when it's down like this year and wait for 6 months to 1 year, mid to long term. I think this will bounce back nicely with a vengeance. All right, so with that, thank you very much. Happy investing and trading. Please subscribe.